Good morning and happy Monday to you. Welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Let's take a look at the headlines this morning. Rate cuts are unlikely in March in the US, according to Fed Chair Jerome Powell. He says this in an interview aired on Sunday. He adds that the committee wants more confidence before moving to a restrictive stance. Quality, competitiveness and valuation matter when it comes to divestment of PSUs, says the finance minister in an exclusive NDTV interview. Focus shifts to the RBI policy after the budget. SBI chairman says that he sees no change in the stance or tone. The status quo is likely to continue. He says this in an NDTV Profit exclusive. Paytm denies probe by ED, says it is not involved in money laundering. Separately, Traders' Body advises customers to switch to other payment applications. The Adani Group will start operations at what will be the world's largest single-location copper plant by March. Now, the top news this morning, Fed Chair Jerome Powell has said that the central bank will proceed carefully with interest rate cuts this year and will move at a considerably lower or slower pace than the market expects. When asked about the likeliness of a rate cut in March, he said, and I quote, "We've said that we want to be more confident that inflation is moving down to 2%. And I did say yesterday that I think it's not likely that this committee will reach that level of confidence in time for the March meeting, which is in 7 weeks. So I would say that's not the most likely or base case." End quote. As of Friday, the bet of a rate cut had fallen to 20% from 40%, according to a Bloomberg report. That's because the economy has remained resilient despite higher interest rates. And that's visible in the jobs data for the month of January, which came in much better than expectations at 353,000. This after December's figure was also significantly revised upwards to 333,000, according to the Labour Department data, of course. All of that has prompted selling in bonds at the end of the trading week last week, and that pushed the yield on the 10-year Treasury to close to 4.1%. It had fallen to below 4% just last week. Now, markets are obviously reacting to Powell's statement this morning, with the Dow futures currently negative, and you have quite a few of the Asian markets that are trading with a negative bias as well. Among the early risers, you had a couple of the three early risers trade in the red, with the Kospi losing about 1% or more than that, and the Australian benchmark also losing that amount. And you have the Hang Seng as well as China or Chinese onshore markets, which have opened in the red this morning. Of course, a lot more happening in China that is reflected in that downtick this morning. But let's turn to the Indian equity markets, and you had quite a roller coaster ride on Friday to end the week, an unusual 300 plus point range for the Nifty 50. What are the latest cues from the F&O space heading into the new trading week? Samina is joining in to give you some perspective on that. Samina, like I was saying, it was a frenetic session on Friday. What do we see at the start of the week?
Indeed, Alex, I think you put it right. It was a roller coaster ride for traders on the street on Friday. It was a wide range of trading. Finally, the Nifty made an intraday high, a new life high in terms of intraday close, but finally closed at levels of 21,853, 0.7% higher. What was also interesting is that it was a wide base buying that was seen across the board. Bank Nifty, if you can quickly pull that up and see what's happening there, because this continues to be a bit of a sore point for the markets. 46,100 was an important level, but the struggle really was felt at 46,500, but the spot finally closed on Bank Nifty with a 0.5% cut. Now, what is also important to note is that Nifty Bank Premium is trading at a 265 point premium on Bank Nifty, but the best case scenario is that activity is largely focused and Bank Nifty starts contributing to the Nifty up move this week. What you also want to note is that the VIX index has cooled off a little bit, so that's a little bit of a comfort coming in for the street. That's really where the open interest change is visible. Open positions, the futures and options picture indicate that in this week, if you see more activity in terms of puts being written at levels of 22,200, you may see the Nifty scale up to new highs. But open interest clearly focused and indicating that a new record close for the Nifty could be on the cards. That's largely what the picture has. has been. What you also want to take note of is the short-long, the ratio that you have for your FPIs or FIs has also dropped significantly, indicating that foreign investors have now actually cut off their short positions, now betting on the long side of the market. What you also saw that FI activity picked up on Friday, so they did come in as net buyers as opposed to selling in the equity market all through the month of January. So a couple of positive cues, right? Bank Nifty is required to participate, so that's going to be very, very critical for the Nifty to close, make a new closing high. Along with that, your VIX looks comfortable, so that's something what we're taking comfort from as well. Your maximum call open interest sits at levels of 22,200. So what we really need is that the Nifty needs to break out about 22,000. Once those levels are taken out, you could see new record close closer to levels of 22,200. And in order to do that, call writers need to exit 22,000 and put writers need to enter that level. So if you see more put activity building up at 22,000 up here, which is what we are seeing in terms of call activity, if that ratio sort of changes over the next few days, you may see the Nifty actually doing quite well over the next couple of days. What the mentioned GIFT Nifty, like you said, is indicating to a flat start. So don't expect fireworks in today's day of trade. It's going to be earnings again. Could be a volatile week again, but new highs still cannot be ruled out, Alex.
And that there is the indicative open. Thanks so much, Samina, for laying that out for us. Of course, Samina will be back in just a bit to take you through the nitty-gritties of things before the start of trade. But let's move on, in fact, and talk about State Bank of India, which is the first Nifty company we're focusing on the earnings front, and the bank's net profit dipped by over 30%. I believe there is a one-time item to talk about which has caused that decline in the bottom line. We've got Mimantsa joining in to give us the fine print and the key takeaways. Mimantsa, what can you tell us? Good morning.
Good morning, Alex. So, yeah, the bank showed that one-time provision for pensions as an exceptional item, and that has led to a 35% fall in its year-on-year net profit. Now, with this, the return on assets has also come down very sharply to 0.62%. If the bank had not provided for this pension-related provision, the return on asset would have been around 1%. The net interest income grew by mere 4% year-on-year, which led to a 7 basis point compression in net interest margins as well. Now, this is because SBI's cost of deposits rose while the yield on advances remained almost flat in Q3. So, all in all, deposit repricing is one of the reasons that is leading to a margin compression for SBI as well as across the banking system. If we talk about deposit growth in particular, Bernstein has pointed out that even though YOY growth for a country's largest bank was in line with the system deposit growth, the sequential deposits only grew 1.6%, which is lower than than other banks and top private banks as well. Loan growth, however, continued to be led by retail loans, but management expects a significant pickup in the corporate credit book due to the capex push, the private capex push. The slippages this quarter, the management has said that one SME account has led to higher slippages on a sequential basis. Having said that, the staff costs are expected to remain elevated in Q4 due to provisions of rupees 5,400 crore, according to MK analysts. Now, this is why some brokerages have trimmed down their earnings outlook for FY24, but they have maintained their buy rating on the bank. One interesting bit in this quarter that I would want to highlight here, Alex, is that the SBI's intent to raise capital going forward. On net basis, the bank is capital adequate, like Mr. Dinesh Khara, SBI chairman, had said in the post-earnings conversation with us, but they are open to raising growth capital if the loan growth exceeds the return on earnings growth.
Thanks so much for giving us that perspective, Mimantsa, this morning. Let's also focus on UPL then. It's reported a December quarter that was quite disappointing. The company's revenue dipped over 27% and margins have also contracted quite substantially. Varsha is joining in to give you some perspective on that. Varsha, seemingly the pain in the chemical space is not over.
Yeah, good morning, Alex. As you rightly said, the pain isn't over, and I think they may require one more quarter, to make things improve. Now, if you see, when it comes to UPL, we saw weak results. Now, company did post net loss of rupees 1,600 crores. Now, what are the reasons behind this weak results? One of the reasons is pricing and destocking has hit earnings. If you see, revenue decline is due to destocking, low channel demand in North America and Europe. Also, the ongoing pricing pressure in Brazil and other key markets have actually affected this growth, where the demand is weak. Also, if you see, a contribution margin has been impacted by high cost inventory liquidation and high rebates to support channel partners. Now, UPL did had a con call. So few highlights from the con call is the company is launching new products which will help its recovery in next 2 to 3 quarters. Also, UPL is aiming at $100 million operating cost savings in FY25 over FY23 base. Also, in Brazil, companies facing pricing related challenges, though they have gained the market share from 8% to 10%. And in Europe, channel inventory is a key challenge apart from product ban, which results in volume decline. Also, if you see, volume may decline in Q4 FY24, but likely to show some growth quarter on quarter. And companies expecting a lower cost in inventory for FY25. Also, the management expects sequential margin improvement in Q4 FY24, although companies expecting to normalize business in Q2 of FY25 as destocking subsides. Also, there's been some rating issues with this company. So the weak year-to-date results and high rate of almost 31,000 crores of debt raised concerns on sustaining investment grade for the company. So the company said that it will await feedback from rating agencies after submitting details. And since UPL earnings have been crushed, it is possible that rating agency may extend time for UPL.
All right, thanks so much, Varsha, for breaking down the numbers for UPL today. It could be under pressure based on the print of its earnings. We've got Tata Motors also to focus on, and this was expected to be a stellar set of numbers and likely also on the back of a lower base last year. But you have margins that have improved quite substantially, and the JLR performance is something to look at very closely. It has performed well. We've got Vinay to give you some of those key takeaways. Vinay, what can you tell us? How does it stack up to the expectations?
Yeah, so if you see that the profit has more than doubled on higher JLR sales, and it has significantly beat the estimates of the streets. So this is the fifth consecutive quarter of profits for the company, and you could say that a likely turnaround has been completed, because now the company is expecting an even better performance in Q4. So if you look at the JLR sales, excluding its China JV, the sales rose 27% in the quarter. And if you look at the Indian business, which is the passenger vehicle and CV, so passenger vehicle sales rose 5% in the quarter, and commercial vehicle sales rose 1%. So company is saying that all auto segment businesses are performing well, and they continue to expect that it will continue the performance in the coming quarters as well. The company is confident because they are saying that new launches will be coming at Tata Motors passenger vehicle business, and the supplies at JLR will also improve. And you can see that the improvement in JLR sales has also led to an expansion in the margins as well. The company is confident of achieving its deleveraging plans as well. So they are saying that they are confident that they will end the financial year 24 with a net debt of less than $1 billion, which was their earlier goal. And they are also sticking to their plans regarding the cash flows of the company.
Right. Thanks so much, Vinay, for bringing us those details. Consolidated basis, the EBITDA margin standing at close to 14% for the quarter, which indicates that the Jaguar Land Rover margins have improved quite substantially, and that's certainly a stock to watch out for in trade today. We have to slip into a very quick break. We've got more stock-specific action on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. We've got an update on the Zee-Sony case, where Sony has just said that they are disappointed with the SISC's denial of emergency interim relief that came over the weekend. To put this in context and tell you what this means, we've got Sajid joining in. Sajid, essentially what Sony was asking for was an emergency interruption in what Zee is intending to do with the NCLT, right? What can you tell us about the latest development?
It's a setback for Sony for sure, because they were seeking an injunction against Zee from approaching the NCLT with respect to the existing case, which is basically to enforce the entire merger through the NCLT process. What SIAC, which is a tribunal, international arbitration tribunal based out of Singapore, has said that it doesn't have any authority to direct NCLT at this point in time, and so the interim application, which was moved by Sony through its companies, has been rejected by SIAC in that sense. But Sony continues to say that it will fight the arbitration to ensure that it gets a termination fee, which is $90 million, which it's seeking from Zee. And Zee, on the other hand, is in NCLT to enforce the merger, which was approved by the NCLT and which was later on terminated after the deadline for the merger ended in January.
Right. Thanks so much, Ajit, for breaking that down for us. Another stock to watch. It's going to be an action-packed day for sure. There are more stocks, and the likes of Aurobindo Pharma as well as HG Infra and more are in focus. Mika is joining in with some of the key details there. Mika, morning. What can you tell us?
Yes, so I'll start with Aurobindo Pharma, where the US FDA has finished an inspection at its Unit 3 of its wholly subsidiary UGR Pharma Specialties. Now, the inspection ended with 9 observations, which is going to lead the company to stop manufacturing lines of certain products, but it doesn't say any material impact on the business. Then we have HG Infra Engineering, which has received an LOA from the Central Railways, where it's going to construct a new BG line approximately of 50 kilometers, and the order is valued at 716.11 crores for a construction period of 30 months. Then we have Cochin Shipyards, which has signed a new contract with the Indian Navy to undertake medium refits for 2 of its Indian Navy vessels. Now, the contract value is at 150 crores, taking the total order intake in Q4 to 750 crores. Then we have Torrent Power, which will set up 150 megawatts of solar power projects at 4 Shahpurji desalination plants. And the last mention is Mahindra & Mahindra Financial Companies, where the company did report disbursements of 4,440 crores, which is an 11% year-on-year growth, and its collection efficiency stood at 95%.
Right, thanks so much for getting us those details, Mika. Let's continue to focus on earnings then. We've got Interglobe Aviation as well as Delivery, Titagarh Rail and Affle India that have reported their third quarter numbers. And Anushi is joining in to give you all the key details there. Morning, Anushi. What can you tell us?
Morning, Alex. So starting off with Interglobe Aviation, which is Indigo, has reported a strong beat on its results, with its revenues growing about 30% at rupees 19,452 crore. This was mainly led by its improvement in yields, which saw about a 2% YOY increase at rupees 5.48 per kilometer. Now, even the EBITDA showed about a 40% growth, with the margins improving at 28% compared to 25% earlier. The net profit also almost was like 2.1 times at about 2,998 crore compared to 1,400 crore of last year. In other key highlights also, the capacity growth guidance was revised to 20% compared to the north of teen guidance that they had maintained earlier. Now, coming to Delivery, the revenue showed about a 20% growth, which was led by its express parcel segment and the part truckload business, while the EBITDA now was like positive compared to about EBITDA negative loss of about 73 crore with the aid of its transportation business. With this, the margins now stand at about 5%, with the net profit at about 11.7 crore compared to a loss of 195 crore in the last year. Third, we have is Titagarh Rail System, which again was a beat on its expectations, with the revenues showing about a 25% growth led by its freight rail system. However, the company's other segment, passenger system, did record some decline in this. Now, EBITDA was up about 52%, with the margins also showing improving at 11.5% compared to 9.5%. And last on the list is Affle India, with the revenue growing about 15%, driven by its core core CPCU business, while the EBIT was about, the margins were down about 25 bips compared to 15.7%, compared to 15.9.4% earlier. So these are the 4 results that we should keep on focus.
All right. Thanks so much, Anushi, for breaking those numbers down for us. From the Nifty 50 pack today on the earnings front, you've got Bharti Airtel that will be posting its numbers for the third quarter. And its net profit is expected to be a little bit restricted on account of its spend on 5G capex. We've got Smriti joining us to tell you more about the key expectations here. Smriti, morning. What are the key numbers to focus on here?
Good morning, Alice. Alex, you rightly mentioned that net profit will remain restricted on the back of 5G capex spend and even devaluation of its African currency. If you look at the other metrics, that's revenue, that's likely to rise about 3.5%, about nearly about 38,338 crores. Whereas if you look at EBITDA, that'll also remain restricted to about because of 5G spends as well, and is likely to increase only 2.5%. Margins likely to remain flat. If you look at ARPU, that's likely to increase only 1.1% quarter on quarter to nearly 205 rupees as compared to 203 in the last quarter. Now, the African enterprise and home services are likely to show steady growth in this quarter. The underlying constant currency growth is also likely to be healthy, even though there's going to be some devaluation in the African currency. Now, the company is targeting at least 500 billion of market opportunity with the enterprise segment. So that's a big plus for Airtel. Then the company is also expecting about 80% of corporates will be putting in or will be using 5G in the next 3 years. So that's also another plus for Bharti Airtel. And we'll keep a track of earning, and we'll bring you all the updates on that.
Absolutely. Thanks so much for getting us those details this morning. That ARPU number, certainly one to watch. 205 is the expectation. Let's see where it comes in at. There's action from the primary markets, and in fact, it's quite a lot of activity at that this week. Not a lot to be raised, a cumulative amount of 2,600 crore rupees, but there are as many as 4 public issues to watch this week. Saloni is joining in to give you some details on the companies that are hitting the market. Saloni, morning. What can you tell us?
Good morning, Alex. To break down these numbers and how much these companies are raising individually and which issue is opening when, first is Park Hotels, which is opening today with the aim to raise about rupees 900 crore. Now, it combines a fresh issue of about rupees 600 crore worth of shares and offer for sale of rupees 320 crore. It has an issue price of rupees 147 to 155 rupees per share. And the price to earnings, price to equity ratio is about 68x. Now, when we compare it to its listed peers, which is Indian Hotels, Sami Hotels, Lemon Tree, they are in the range of about 56 to 70x, so pretty much in that range. And the implied market cap of the companies at the upper price band is over rupees 3,300 crore. Now, it's among the 8 largest hotel chains in India, and the diversified portfolio that it has is making analysts bullish on this. And in fact, Anand Rathi and IDBI Capital have subscribed rating to the IPO. Now, talking about the other 3 IPOs which are opening on Wednesday, 2 is from the small finance bank space. Talking about Capital SFB IPO, it is priced in the range of rupees 445 to 468 per share. And it's going to raise about rupees 520 crore, which is going to be a mix of fresh issue as well as offer for sale. That means that the existing shareholders will bear some stake. Now, the price to book ratio is going to be about 2.6x. Price to book is something that is a metric that you go for financial services. And implied market cap is going to be about rupees 2,000 crore. Jana Small Finance Bank, on the other hand, is priced in the range of rupees 393 to 414 per share. It's going to raise about rupees 570 crore, again, a mix of fresh issue and offer for sale. And it has a price to book ratio of 1.2x with an implied market cap of over rupees 4,300 crore, which is at the upper price of the price band. Rashi Peripherals, it's a Mumbai-based distributor of technology brands. It is priced in the range of rupees 295 to 311 per share. It's going to raise about rupees 600 crore of shares, which is entirely a fresh issue of shares.
All right. Thanks so much for breaking that down for us. We're completely out of time on this particular edition of All You Need to Know, but there's lots lined up in the next hour or so before the start of trade. So do stay tuned. This is NDTV Profit.